I'm going to do it right here. Elliott, of course, the biggest player in activism, $65 billion hedge fund, best known, of course, for activism. It's made a $2.5 billion investment in Texas Instruments.
No!
Yeah. It's urging the company to improve its free cash flow by adopting a less rigid plan for capital expenditures.
That's so smart. They always say, I've got the plan. The plan is the plan.
In a
They're very Belichick.
letter, Elliott proposes Texas Instruments introduce what it calls dynamic capacity management, a strategy that would allow the company to achieve free cash flow, Elliott says, of as much as $9 a share by 2026. That would be about 40% above the current consensus of analysts who follow what is the world's largest maker of analog semiconductors. Now, Elliott believes Texas Instruments' rigid, and they use this word in the letter, rigid adherence to a capital expenditure plan that was put in place in 2022 has eviscerated shareholder returns by greatly reducing a metric by which TI has always asked to be judged, namely free cash flow. Citing the reduction of free cash flow, it was $6.40 a share in 2022. Right. It's running at about what expected to be $1.83 a share this year. Elliott maintains that TI has alienated investors who might otherwise gravitate to what is a very significant position in serving the automotive and industrial complexes with its analog chips.
Wow.
Now, its stock price, Elliott insists, has suffered as a result. It does trail its peer group, at least according to Elliott's numbers, by substantial margins over the last 2, 4, 6, and 10-year periods. The focus of Elliott's letter is on that 2022 capital expenditure plan, which called for TI to ramp its CapEx spending to as much as $5 billion a year from 2023 through 2026, bringing that spending to as much as 23% of revenues from what had been CapEx spending far below that previously, somewhere around 5% of revenues. Now, that allocation of capital will result in the addition of capacity that will allow the company to almost double its current annual revenues. So it would have enough capacity to support as much as $30 billion in revenues. The problem, Elliott maintains, is that a reversal in the cycle of demand for its chips since the plan was put in place will result in capacity levels that are 50% above consensus revenue expectations in both 2026 and as far out as 2030. So Elliott suggests the company either communicate more forcefully why it believes such an increase in capacity is justified, or move to a more dynamic approach to CapEx in which it would potentially build these new fabrication facilities, but actually be more deliberate about equipping them, because that's where the real cost comes in, putting all the stuff inside. And they say that, at least in their opinion, would allow for a more precise response to market demand. So, you know, guys, we'll see what the response is from TI. I would also go on to just say that the letter itself from Elliott is not particularly hostile in any way.
Okay.
It's incredibly complimentary of TI, the incredible business the company has had, and really only briefly on page 11 does it take to task the board, saying that they should have been more mindful of prudent capital allocation policies, and that they hope that they, in fact, will be in the future. So it doesn't appear that we're setting up here for any sort of a board fight in the near term, or Elliott looking to try to push management out in any way. They are simply introducing this idea of, hey, maybe you can do a better job either communicating why you feel like you have to spend all this money, or perhaps starting in, let's say, 2026, start cutting back significantly on it so you can get to a much higher free cash flow number.
Well, I've got to tell you that when you're on a Texas Instruments conference call for the quarter, I don't want to say it's belligerent. I would say it basically says we don't have to answer to you. We have our own rule. We have our own game. Don't throw us off our game. And this was very, it rattled a lot of people during the period where every single one of the auto companies couldn't get any large form factor, which it would have been Texan, so they had to go to Taiwan. Right. And what disturbed me was that during a period when you really needed their chips, they just said, listen, this is our plan. We're not going to throw ourselves off our plan. Now, I think, David, what could happen here is that it could get negative because of the doctrinaire nature of Texas Instruments. And I think their rather unwillingness to ever debate even their strategy.